Hi guys, I'm Kevin Wadsworth from NorthStarBadCharts.com. I want to talk to you today about Bitcoin because there's so much going on in the crypto markets at the moment, and I've been reading, as I'm sure you have as well, a lot of stuff on social media about Bitcoin and its imminent rise to 50,000, 60,000, 100,000 and beyond. So I want to set the record straight about my position on Bitcoin, and I want to show you how technical scientific evidence can really help with reducing risk. And we'll talk a little bit more about that in a moment, but I'm going to share my screen, and just to set the scene, what I'm going to do is I'm going to show you a very important chart that hopefully you saw some time ago, and you might not have done. If you haven't seen it, then I'm going to explain it, and once I explain this chart, I think hopefully you'll be able to appreciate what I then say afterwards. It helps to set the scene and demonstrate that technical chart analysis is a very big weapon in your arsenal. So without further ado, I'm going to share my computer screen and switch my video off because you don't need to see me through all of this. So there we go, that's the screen sharing switched on, and I'll just turn my video off. Right, this is the chart that I put out back in, when was it, May of last year, so we're talking about 18 months ago now. And myself and Patrick Karim, my business partner, had already pre-warned everybody to exit Bitcoin at $55,000 or thereabouts, selling into strength. When we passed the peak and began to show weakness, there was another warning from us to exit into weakness anywhere around the $45,000 mark and a little bit higher. So there were plenty of warnings before this chart was produced in May, but this was my Bitcoin forecast in May of 2022. And my analysis showed a bearish rising wedge pattern. Now, Bitcoin behaves in exactly the same way as any other asset. When you examine the price chart, the moving averages, the technical indicators, Bitcoin is no different to anything else. Talk a bit more about that in a short while, but Bitcoin is no different to anything else, and it behaves in exactly the same way. So what that means is that when an important trend line is broken, it's sending a signal to the markets. If several technical indicators are giving negative feedback, then the message is that much stronger. So for example, we broke down here below the 200 week moving average, sorry, beg your pardon, the 200-day moving average. That's the green line, the 200-day moving average. We had built out another bearish expanding wedge there. You can see that little wedge there. And we'd broken down below the support line. All sorts of other technical indicators as well, like the stochastic RSI, heading down into the sell-off zone or the plunge zone. When we hit that low zone in the bottom there, the price is prone to dropping significantly. So all of those things put together led me to a roadmap which said that the green zone here up somewhere, I don't know, between about 85,000, somewhere around maybe $85,000, that was something that we could forget. It said, unless we close above support on Sunday, we have a breakdown at the yellow circle and we can forget the green circle. Well, we didn't get a close back above support, so we can forget the green circle, okay? If that happens, the first target is the orange circle. There we go. This is the orange circle somewhere, a bit difficult to tell from the scale there, but I suppose it's somewhere around about $30,000, that kind of level. And if the orange circle is reached, a move to the red circle near 20,000 becomes probable. So I've got this zone highlighted between about, I suppose, about 17 or 18,000 all the way up to about 22, 23,000. So that zone became the target. It then goes on to say that the dreaded reverse symmetry move, that means repeating the entire move that from the breakout, except to the downside, the reverse symmetry move to the grey circle is a low probability. That means it can happen, but it's more likely to not occur. So it's a possibility. Once you reach this area here, you then assess the chart, assess the indicators, and make a judgment as to whether this area here, somewhere around about 12,000, is likely. Okay, so what happened? How did that forecast play out? Well, here we go. I've put all of that information on this chart for you. The green circle that we can ignore, the breakdown at the yellow circle just happening, and then the orange, red, and the low probability grey circles. So you can see all of the information from the previous chart on here. And I'm just going to hit the play button and we can see how it played out. Hit the orange circle, bounced, as I suspected, hit the red circle, bounced. And then at that point, the technical evidence started to suggest that the grey circle was less likely, but we did not turn bullish on Bitcoin. Why didn't we turn bullish on Bitcoin? Well, I'll explain that in more detail shortly, and also explain to you what I think is most likely to happen next. So here we go. We'll follow the price action and see how it panned out through the rest of the year and into 2023. It tested support a number of times, and you can see there was a risk of it going down to that grey circle there, and it actually broke below that zone of support that I've highlighted, but it soon got back above it again, and we had that 50% move from around about 16,000 to 31,000 to 32,000, that sort of area. Now we failed to break through that zone that was so important on the way down, and on the way up is also so important. We have to get above it to start turning bullish. Now, what's going on at the moment, and what do I think is going to happen next? Well, the most recent price action is starting to give us some clues. So if I just take off all of the indicators on that chart, and you just have to bear with me a moment whilst I do that. Okay, let me just remove indicators. There we go. Just hit that, remove all the indicators. Right, okay. I'm going to put this out onto the monthly chart, and we'll zoom out a little bit. And we have to ask ourselves the question that technical analysis can answer for us. You're wanting to know what's going to happen next with Bitcoin, and you want to know, do I listen to the bulls or do I listen to the bears? Is Bitcoin a sure thing? Well, there's a lot of arguments for Bitcoin moving to the upside. All sorts of talk about nodes, all sorts of talk about BlackRock, all sorts of talk about ETFs, all sorts of fundamental reasons why Bitcoin is going to go on and do extremely well. And I understand all of that. I don't deny it. I completely understand it. But as a scientist, I want the evidence. There are a lot of very good reasons why uranium should have doubled, tripled in price several years ago, because it was there's a very strong fundamental argument for it. But it took a lot of time for it to do that, and it's only just recently done that and is in the process of doing that. So what I'm saying is that just because you've got a fundamental argument, it doesn't mean that it's going to happen this year, next year, or the year after. And yes, I know Bitcoin's got a 4-year cycle, but then so does gold. And having a 4-year cycle doesn't mean you're going to make new higher highs. It just means that on a 4-year cycle, that you have a low point at roughly every 4 years. It doesn't tell you too much about how high it's going to go. So what are we looking at with Bitcoin? Well, visually, what I can see is that something else you have to remember is that Bitcoin started from near zero. And that's why it made gains of thousands and thousands and thousands of percent. If you're starting near zero and something's finding its place in the market, then, I mean, look, it's moved up something like 250,000%. That's because it started near zero. Anything that starts near zero can move up 1,000,000%. It's not difficult. You know, it happens with IPOs, with new stocks, new shares. You get moves of thousands of percent initially, and then it finds its level. And that's from that point onwards, you can start doing technical analysis on it. So during this early phase, technical analysis is very, very limited in what it can do. You can look on smaller time scales at daily and weekly breakouts, but on a monthly chart like this, you just have to wait for the instrument to find its value and to find its levels and to have some cyclical behavior that you can start to then analyze. Okay, I'm the first person to admit that you can't use technical analysis on something that's only been around for a few months or a couple of years. It's very, very difficult to get the weight of evidence that you need. Okay, so now in its first cycle, Bitcoin moved up something like, what is that there? 50,000%. Okay, great. So in its second cycle, so this is from the bottom to the top. In its second cycle, it moved something like 5,000%. Okay, in its third cycle, bottom to top, it's moved something like 2,000%, maybe a bit less. So what I can say straight away is that the momentum is declining. Huge momentum here, momentum declining, momentum declining. is it going to roll over, and is the momentum going to become negative? Is my question as a from a scientific point of view, and how can we start to do that objectively rather than subjectively? Subjectively just means you know, sort of through supposition. Objectively means, you know, you can actually do it through proof, through science. Okay, so let's draw in some support lines, and we had a very strong support line here, which of course has now been broken to the downside. So from the initiation all the way through this initial phase, the first cycle, and then during the second cyclical bear market, it broke down below that, and it has not regained that support line. However you draw it, it hasn't regained that. Okay, now let's look at some other support lines. There was another one that developed in here. You can see a number of touches, a number of confirmations. And again, it depends just exactly how you draw it, whether you use the candle chart or the line chart, but I'd suggest it's somewhere around about there. And that line too has been broken. Now, there's another support line that you can put in. It's actually a pivot line, which starts, I think, here. Let me just try and remind myself where it starts. There's a number of pivot lines, actually. There's one here, and you can also raise it to somewhere in here as well. And you can see how the candles react to that pivot line. They bounce off it initially and then break below. Then it works as resistance, then it breaks above, then it works as support, support, support. But importantly, we're below that one as well. So what I'm saying here is that we're progressively breaking below a series of support lines, which ties in with a loss of momentum, because as you lose momentum, you're going to gradually break more and more of these support lines. Okay, so I'm going to just remove some of those because we know that we've broken all of those. Very often more important are horizontal support and resistance lines. So, for example, you can see here, this line from the peak was very, very important, because when we broke above it here, we were in a confirmed bull market that led to the bull market peak, and we moved up from $1,000 to something like $20,000. So you would have made a very, very good gain if you'd entered when the evidence told you to enter at that resistance line break. Same thing here. You can see that we've broken above resistance and moved on from what's that, $12,000 to $69,000. Now this line here is actually a zone of support and resistance. In reality, it's made up of candles from lots of different time frames, and you have to use your common sense and accept the fact that technical chart analysis is not just lines, it's also zones of support and resistance. And you can draw in a zone of was resistance, now support in here. And when you do that, you can see that it's tested that support and bounced off it. But for a bull market to get into full swing, we need to get above this. Well, this is my my suggestion to you, is that we need to get above this line here, which is sitting at 31,000. And there's actually, again, it's actually a zone between 31 and 35,000, but 31 is pretty pivotal, and we've just been rejected from that. Now, if this is a monthly candle chart, these are all monthly candles. So far what we've shown is that we've bounced on important support in this area here. It was actually around about 15 or 16,000, wasn't it, where we found the support? But we're turning back down again here at the moment. And is it something to worry about? And if it is, will 15 or 16,000 hold? Well, we just zoom in to the weekly view. So we're now looking at weekly candles. It gives you a little bit more granularity and a bit more detail. So the evidence from the weekly candles, we put a support line on here, which was very important. Of course, you can see a clear test of that support, another test of the support, another test of support, and another. And then it failed. So what we're dealing with there is a support line failure. You could just about probably draw this as some sort of bearish rising wedge, maybe. Let me just bear with me a moment, if I can get that it's not a, I suppose you got 3 candle touches there. To have a valid trend line, you need, oh look, it goes to that candle back there. You need at least 3 candle touches. So this one here, you get a wick down, which you wouldn't have thought was significant, but actually that wick ties in very carefully, very well with this candle here, which tested the support, and then it acted as resistance. And then you've got another 2 candles here, and another 1, 2, 3 there. So that's a valid upper resistance line there. And often these lines aren't obvious until after the event. So technical analysis is, it's not an easy thing, because you're looking for all possible support and resistance lines, but you never use one piece of evidence. You have to use multiple pieces of evidence. So just because this support line is broken, it's not necessarily the end of the world. Okay, right. So let's see what other evidence we've got. We know we've got a support line break, and that would now suggest that 31,000 is less likely than a retest of this zone below. And I would say the zone below probably takes us to about 19,000 as on a more optimistic point of view, not that 19 to 20,000 area. But I think if we get to that, it's highly likely that we test the previous lows, and then it's a question of whether that holds or not. The size of this wedge and the recent breakdown does give me cause for concern, but I'll pause that thought for a moment, and we'll again just see if we can get rid of all these drawings. And I will put this back onto the monthly chart for you. And I'm going to put some indicators on, some technical indicators that also add weight of evidence. So like I said, we never use just one piece of evidence. There's the price chart. You can stare at that all day long and not really come to any solid conclusions about what's going on. You need to be able to put it all into context. So I'm going to hit this button here, and it puts on my monthly chart settings. And what that does is it puts on the volume by price, the volume by time, the Ichimoku cloud, which is this red and green cloud shape thing, and the moving averages, in this case, the 12 and the 36-month moving average. Now, what you're going to notice, a few things to note here. Volume is drying up, volume by time, and volume by price. Well, there's not really much support, it has to be said, until you get all the way down to a few $100s, which might surprise a lot of people. But the volume is way down below current levels. It's all the way down here somewhere. Yes, you're going to hit some volume support, some small volume support around about $9,000-10,000, and then there are other small volume nodes here. But the real big volume actually comes in much, much lower down. So some very clever money got in there, I suppose. Anyway, the point here to note is that throughout the whole of Bitcoin's life, and let me just put, Bitcoin has a 4-year cycle. So I'm going to put the 4-year moving average on. That's the green line. 4-year moving average. Throughout the whole of Bitcoin's cycle from 2015 to 2022, the 4-year moving average held support, but we've broken it. You can see we actually broke it very briefly in 2020, but the monthly candle closed back above the 4-year moving average, so it wasn't a problem, and off we went. We were also briefly below the Ichimoku cloud, which isn't a good place to be, and the time to buy was when we got above the Ichimoku cloud and that horizontal breakout level. And then you could, this is when you have confidence. Okay, you can take a chance down here, but when you're buying down here, you're making an assumption. And in trading and investing, I never make assumptions ever. I'm making the assumption that Bitcoin is going to do what it did the previous time. Now, if you're buying now, you're making the same assumption, and you might point to a lot of fundamental reasons why buying here is a great thing to do, and it may well turn out to be the case. But if you want to buy cryptocurrencies with confidence, you have to wait to get above this. I'll put it back in again, 31,000 level at least. And there's actually a zone, as I said, between 31 and 35,000. That's actually the 35,000 resistance line, roughly speaking. And you can see it ties in with the Ichimoku cloud. It's actually 36,913. So you could argue it's actually a little bit higher. I'll drop it just to here for you, closer to 35,000. And what do we have in this zone here that is so indicative that we can have much more confidence well, you've got that resistance line, you've got the Ichimoku cloud, and if you imagine where this green line, the 4-year moving average, is going to be in the next 12 months, you've also got the 4-year moving average in there. So you've got what I call an evidence cluster in there, and that is the barrier to Bitcoin going on a large bull run that's going to take us to dizzying new heights. But for the time being, I've got to say that there is nothing yet on chart that looks bullish. Now, there's another set of indicators that I'm going to show you, which are really very, very revealing. And these are the sorts of indicators that we use all the time at the website for our members. And so let's have a look at them. I'm going to click on here. I'm going to click on the combined indicators. So the Bitcoin chart is now at the top. And what we're looking at down at the bottom here is 3 key indicators. The distance from the 3-year moving average is the first one I'm going to deal with. And then you've got the ratio versus SPX and the rate of change. Now, the distance from 3-year moving average visualizes what you can see above. What you can see above is that it's been above the 3-year moving average and is now currently below it. Okay, so in the first cycle, we got a long way above the 3-year moving average. Okay, the next cycle, we didn't get so far above the 3-year moving average, and now we're currently below the 3-year moving average. We've actually tested it again. You can see that because it moved back to the 0 line, but we're now falling away again. So this is weak. This is bearish looking action from the distance from 3-year moving average. I'm going to move this further up here so you can see it in more detail. There you go. Look, we're declining, we're losing momentum, and we're now struggling to get back above the 0 line to recover the 3-year moving average. Now let's look at the next indicator. This is the ratio versus SPX. This is how Bitcoin is performing against the S&P. It's not the first time it's been below its 3-year moving average. That's the green line. So we've got 3-year moving average of the ratio versus the SPX, and we're below it. But it's the nature of the action that worries me. We've come up to test the green line, and we're now moving back below it. Each time we tested it before, we moved above, and off we went. So this doesn't look good. And again, you've got declining momentum here. You've got loss of momentum. It looks like it's rolling over. It looks like the ratio versus the SPX is rolling over. And what this tells us, I mean, we underperformed the SPX from 2013 to 2015. Bitcoin then underperformed the S&P from 2017 to 2019. And this time it's been underperforming the S&P from 2021 to 2023 and continues to do so. Okay, so that doesn't look good at the moment. Okay, it might become better, but at the moment it doesn't look good. This is the 7-year rate of change for Bitcoin. I could probably put it onto the 48-month rate of change if you like, because it's got a 4-year cycle. Let's have a look. So here we are. I'll just hide the moving average for a moment. This is the 4-year rate of change. So it's constantly comparing where we are now to 4 years ago and what has happened over that intervening 4-year period, how the price of Bitcoin has changed. And so the rate of change initially was incredibly positive, and now it's declining, and it's almost flatlining near the 0 line. If it crosses the 0 line, then it means that we're lower than we were 4 years ago. The rate of change is negative, and Bitcoin has never had a negative 4-year rate of change. So that is important to watch. Let's just change this to a, excuse me, change this to a 3-year rate of change, which I haven't actually looked at, but 36-month is often important as well. So 36-month rate of change. Again, very close to the 0 line. So if we cross the 0 line, either on a 3-year or 4-year rate of change basis, then that will be very, very bearish indeed. So let's just hope that doesn't happen. So the summary from all of these technical indicators is that things are looking weak at the moment, and that things are that we're basically at risk of a significant move to the downside. We can look at classic technical indicators like the stock RSI, for example. And the stock RSI, when it breaks down and comes down from this upper zone into the lower blue zone, you see it led to a long decline that saw Bitcoin dropping by something like 70% or something here, maybe more. And when it happened here, it led to a long period of poor price action, shall we say, and we fell from something like 13,000 all the way down to about 3,000. So price fell again by about 70%. Here, when it broke down, it fell all the way to here. Of course, we fell from somewhere up around 60,000 to somewhere down around about 16,000. So again, a very large drop. And it's happening again. Stock RSI has failed to get to these previous highs. I'll just show you those. So these are the previous highs here, and it's failed to get up there. And that ties in with the loss of momentum that I was talking about, declining momentum that is somewhat concerning. So as long as this stock RSI has this sort of configuration, then I've got to be honest, it really isn't looking positive from that point of view as well. Look where the volume support is all the way down here. So I'm being objective here. I'm letting the technical chart analysis lead me and guide me. I know where to turn bullish, and it's in here. Until then, all the bullish talk in the world doesn't amount to anything. It may be that people are wanting to have the bragging rights and say, look, I told you it's going to 100,000. Well, I'm not saying that it isn't going to go to 100,000 next year. I'm not saying that it isn't going to go on and become the world's answer to currency. But for the time being, well, it's certainly too volatile at the moment in terms of its purchasing power. And that's something else, actually, which I haven't shown you. And I'm just going to finish on this final chart, the final series of charts. Let me just show you another way you can analyze this, which gives you yet more weight of evidence. So Bitcoin versus the S&P. In fact, I'm just going to go to a different setup. Just bear with me a moment. I wasn't really planning on doing this, but I think it's worthwhile doing this for you. Bear with me a moment. One of my favorite charts has come up there, Kamiko. Okay, so we're looking at the ratio charts here, and we're going to look at Bitcoin versus NASDAQ. So here's Bitcoin versus NASDAQ, and look, you can't spin that as being bullish. It's broken down, it's below the Ichimoku cloud, it's in a descending channel, it's been rejected at resistance there. Bitcoin versus NASDAQ is not bullish at the moment. If Bitcoin can't beat NASDAQ, then what on earth are you doing in Bitcoin? Bitcoin versus inflation. Well, the key pivot line there has been broken. It's actually acted as a support line since 2015. We're below the, and some people argue about the validity of that pivot line, which I understand, but also you've got more objective evidence in the form of the Ichimoku cloud and the moving averages. We're below those key moving averages. I'm just going to check it out. It's the 4-year moving average. So the downside is more likely than upside here. So Bitcoin isn't beating inflation and isn't showing any signs of doing that in the immediate future. Bitcoin versus the S&P, again, below the Ichimoku cloud, back below the 4-year moving average. It's not doing anything bullish at the moment, so you can't be bullish until it does something bullish. Bitcoin versus uranium, well, it hit the arc, or the inverted arc, as I suggested was likely, and we've got a confluence of evidence here, the Ichimoku cloud and the 4-year moving average are there as well, and it's been rejected. Look at this candle, this red candle. It's been rejected, so Bitcoin is significantly underperforming the uranium miners, and we can actually measure how much it's underperformed the uranium miners by 70%. So Bitcoin is underperforming the URA ETF as well. Bitcoin versus money supply, same story. You know, we are below the Ichimoku cloud. You have to be above it to be in a bull market. We're below the 4-year moving average. You have to be above it to be in a bull market. We're below key breakdown line. We've lost momentum. We've got Bitcoin versus silver here. Look at that, that's a huge bearish rising wedge. We've broken down, we've retested the Ichimoku cloud, and we've been rejected. We're back below the 4-year moving average, and we're below horizontal resistance. I can't be bullish until that is reversed. Bitcoin versus gold. Look, these pivot lines, the black pivot line, the blue pivot line, the yellow-orange pivot line, we're broken below the first one there. We're broken below the blue one. We're below the horizontal resistance zone. We're below the Ichimoku cloud, and we're below the 4-year moving average. We're on the wrong side of the evidence, okay? And it's quite possible that the target is down here somewhere, back down near the pivot line, the black pivot line, and where it meets the red horizontal support line. So, and this is designed to be on a 3-week candle chart, and put on 3 weeks there for you. But you know, running through Bitcoin versus all of those other investment vehicles, and the evidence is strongly suggestive to me that Bitcoin is struggling. It's really struggling at the moment from a technical point of view. So, you know, please try and approach it with an open mind. And, you know, I hope you listen to our warnings back at 45 to 55,000. And I hope you've been able to, you know, put your investments elsewhere, because if you had, as our members have done, your investments elsewhere would have gained by a significant amount. You'd have grown your net asset value, so that if you really are, you know, a Bitcoin fan and absolutely determined to be invested in Bitcoin, then you could be buying back, you know, lots more Bitcoins with the money that you made in the meantime. There's absolutely no point and no need to sit through a bear market in anything, whether it's commodities, gold, uranium, or cryptocurrencies and Bitcoin. There's no need to be the bank holder. There's no need to suffer the losses and dollar cost average on the way down. Why not put your capital into something that is doing the exact opposite and going up and gaining? Because this is one side of the investment coin, Bitcoin, NASDAQ, tech stocks, which, yes, they've moved up significantly over the last few months, but overall, most are still lower than they were. Certainly Bitcoin's underperforming the tech stocks at the moment. So, you know, why go through that when you could have exited up here somewhere, rotated into selected commodities, as we have done, and selected plays in energy sector and all that kind of thing, and come out down here with much more capital that you can reinvest when you get the evidence and when Bitcoin breaks out. It's the safe way of trading and investing, and that is really what I want to promote. That's what I'm trying to get across here. There's no need to be taking such big risks, and there's no need to be making assumptions when you've got technical, scientific weight of evidence to help you. Okay, I hope you found all of that useful. If you did, why not take a look at our website? Of course, we're always there to help as much as we can, and you'll find me on Twitter, and Patrick as well on Twitter, to help you where we can. That's it from me for now. Thanks for watching. Thanks for listening. Bye.